Hey, everybody, welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. Hope you're all doing well. I want to talk about Bitcoin and the next move. We're, of course, looking at Bitcoin, and right now it's moving sideways. Well, what can we anticipate? We have different analysts sharing their thesis, their respective theories. And of course, we're waiting for Bitcoin to make its move so that alt season can finally come around. So I want to share different charts, different models, and what's happening there. And I also want to talk about how much money was invested in the crypto market this past week via Blockworks. They usually do a summary of that. And guess what? It's in the billions again. So lots of capital flowing in, my friends. And in addition, I want to talk about Raoul Pal. He had a really great Twitter thread where he breaks down how network effects drive the value of affect the value of digital assets. And we've talked a bit about this, right? More people who join the network, the more valuable it becomes. So I want to share what he has to say. And there's some updates around Algorand and Cardano that I want to talk about, and even hip hop artist Kodak Black and what he had to say about Bitcoin. So we'll break it all down. Before we do, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. If you're listening on a podcast site, please give me a 5-star rating. And heads up. I want to let you guys know tomorrow my interview with Monica Long of Ripple. She's the general manager of Ripple X. Will be live. We talk about the building on the XRP ledger with NFTs, even new stable coins like USDC and USDT are on the XRP ledger now, and much more. So you don't want to miss that. Make sure you got the notification bell enabled. Quick word from our sponsor, and that is iTrust Capital, which allows you to buy and sell crypto 24/7 in a retirement account. So you can essentially trade crypto in an IRA account. And of course, there are huge, huge tax savings as a result of doing this, right? If you do it on a normal exchange and you sell and so forth, you incur high capital gains taxes. Many of us have experienced that. Well, you can avoid a lot of that by using iTrust Capital and doing all this trading in a retirement account. They have 25 plus cryptocurrencies. They have a great app and a great support team that is ready to help and answer any questions you have. And they have top of the level security. They use institutional crypto custody via Coinbase custody. So you don't have to worry about security. All of that stuff is being taken care of. And guess what, guys? It is 100% free to sign up. There are no fees to sign up. You can go sign up and see if it's for you, right? Go check it out. And there are no hidden fees. There are no monthly subscriptions or fees like that. It's free to sign up. And if you sign up through my link in the which will be in the description, you get $100 funding bonus. So be sure to check it out. Link will be in the description. All right, let's look at the market here. Not much happening. Bitcoin looks like it's going to close the week here in the red. If we look at the Bitcoin weekly chart, we have a weak red candle right here, and it looks like that's how it's going to end the week. So nothing new. It's just moving sideways, just chopping sideways, man. I wish it would move upwards already, right? It's pretty boring at this point because again, the altcoins are going to wait for Bitcoin's move because the capital flows from Bitcoin into the altcoins. And as I've been talking about, the respective movement of Bitcoin right now appears to be moving similarly to what took place in summer of 2021 when we were in that downtrend, a corrective cycle. But then Bitcoin found its bottom and then it's blasted off, right? So that's what we're waiting for to move for Bitcoin to move into its retracement. There are two theories here. One, and I subscribe to this theory. I think it's more probable, and this is from Blockchain Backer. He says Bitcoin will go into a retracement, go to 55, 58K, hit the top there, then go into the bear market, and then altcoins will pop off and have an alt season. But of course, there is a lot of uncertainty in the world with the Russia-Ukraine situation. In fact, there's rumors, and I don't know if this is confirmed yet, but that Russia is asking China to help it with Ukraine. And I hope that doesn't happen. I hope this thing doesn't get worse. Obviously, we don't want World War III, guys. That is not something we want to live through. If you know your history, war is not good for anybody. And let's hope that doesn't happen because markets will be absolutely affected by this. So here's what different analysts have to say. And Matthew Hyland shared some great charts where he highlighted the Bitcoin 4-hour chart is showing a Bitcoin move awaits. One of the 3 points he mentioned is prices consolidating, RSI, the relative strength index, is consolidating. The MACD close to crossing again. So let's see what happens, my friends, this week. He also shared the following: Bitcoin still remains in indecision, up or down, right? Just chopping sideways. My hope is it moves up. I don't want down. But if it does go down, look, I've been here so long. I've taken profits in certain cycles, and I'm waiting for higher prices, of course, and I'm willing to wait because I see all the institutional money that's coming into the market. Will Clement, who's a great analyst, he shared the following: Bitcoin has been in this consolidation pattern for 2 months as of today. Man, it's once again boring. It's annoying, but we got to be patient and let it do its thing. Market cycles have to play out. Here's what Crypto Burb had to say: We'll have a triple witching Friday this week. Bitcoin may see some abnormal volatility as we are nearing the expiration of equity and index options and futures monthly and quarterly. Well, let me get to the second part. He was kind of promoting some stuff there. He said, technically speaking, Bitcoin has been consolidating for the past few days. There seems to be a potential reversal chart pattern, a coil or ascending triangle combined with pessimistic sentiment readings. This may prove to be an accumulation process unless the war gets worse. So, you look at the charts and it's like, okay, this seems like an accumulation phase, but then you have this macro geopolitical situation, which could get worse, right? With China or somebody else jumping in. And let's hope not. Let's hope they come to some resolution, guys, so that, things can continue as normal. But this is kind of the waiting game. So be prepared, is what I'm trying to say mentally, that these scenarios could play out, right? War could get worse and the market get worse, or this thing comes to some sort of resolution or doesn't get worse and the markets, are not affected as much. Obviously, we want this thing to end. We want the people in Ukraine to be safe. That is most important. But obviously, we're just talking in the aspect of what the charts and the markets might do. Now, here's something that's interesting. Les Miskovsky shared the following: 10 to 100 Bitcoin wallets are stacking like crazy. Their supply is getting parabolic. So he means wallets that are holding at least a balance of 10 to 100. He said these guys correctly sold a meat of 10K to 50K Bitcoin move. So what does this mean? Well, those wallets that have 10 to 100 Bitcoin within them, they sold at the right time, right? Back in November when Bitcoin was hitting its peak, and you can see here the respective supply dropped, which makes sense, right? Well, they are accumulating. Look at this spike. There's a move up here, so they're buying this respective Bitcoin moving sideways, which once again, as mentioned, it could be a great accumulation phase, but macro geopolitical issues could obviously not let that play out, where the accumulation leads into higher prices. So we'll see what happens, and we just got to be patient. But clearly, folks who are of whale caliber, if you want to call it, or medium-sized whales, not the larger whales, they are accumulating. And if you have a macro view, a long-term view, this is certainly a great spot to accumulate. I have bought some. This is not financial or investment advice. I'm putting money in I can afford to lose, and stuff that's not going to keep me up at night. And then if I have to wait another 2 years, I have to wait another 2 years. So that's my mindset. I've already prepared for these things mentally. So just want to let you guys understand what's happening here. Now, we see a lot of money is being raised, a lot of capital, a lot of venture firms, investment funds are raising significant capital to invest both in the tokens and the companies. Well, here's the funding roundup for this past week: more than $1.8 billion pooled into crypto companies and funds this week. Lots of fresh capital entered the crypto space this week, up 36% from last week's 1.34 billion. So step back for a second, guys. With the market right now in a downward trend, right? Bitcoin just chopping sideways. And then you have this war and then the uncertainty from a macro perspective. People, whales, wealthy individuals are still investing. These funds are still getting millions of dollars, some hundreds of millions of dollars. In fact, I'll be interviewing one of the co-founders of Electric Capital. We talked about them about a week and a half ago. They raised $1 billion to invest in crypto. So the money's still coming in. So you don't think they see the news? You don't think they see the war situation or what's happening? They don't see the charts? They do a lot more research than you and I. They have analysts. They have all types of data analytics reports, all types of models and charts and bots and you name it. These guys are sophisticated investors, right? They're still writing checks for 10 to 15 or 100 million, whatever it is. And these companies are raising, these funds are raising money, guys. So once again, this is how, and I've said it many times, institutional money, smart money has beat out retail. Retail is watching Jim Cramer and CNBC and getting manipulated big time, and they move by emotions. Now, I'm not saying that's all retail, like you and I are retail. And if you understand market cycles and you understand you have to leave your emotions at the door, you will see what's happening here. You just got to be patient and go through the cycles. So the week started off strong with Immutable's $200 million financing round, valuing the company at $2.5 billion on Monday. Bain Capital Ventures, which has about $155 billion in assets under management, launched a $560 million crypto-focused venture arm. So I'm not going to go through all the respective funding details, but it totaled to $1.8 billion. Guys, when I see news like this, that gives me confidence because it doesn't matter who's saying what or doing what. I see where the money is going. I'm watching the moves. Watch what they do, not what they say. I see where the money is going, guys. And these moves make me very bullish. Now, Raoul Pal, who I've interviewed on the channel, great guy, very smart macro investor, obviously huge investment background at Goldman Sachs, and he has his own fund. He was investing before crypto. Well, he's now all in on crypto. And, he's been really great in educating folks about different principles that help drive investments and value and drive asset prices upwards. So he talks here about network effects, a thread about network effects and how to value digital assets. For a global macro investor, my independent research service, he says here, Remy, let's see, I guess that's somebody who works at Real Vision. Remy Tetot, I'm saying that right. And I spent a long time analyzing various on-chain data sets to see what were the key drivers of network price and network effects. We updated our well-known chart of crypto adoption versus the internet, both starting at 5 million users. 2021 was an accelerating growth year, and the Reed's law effect of networks built upon networks, creating even more exponentiality. Oh my goodness. Sorry, guys, I'm butchering that word, is clear. So the TLDR here is that, crypto is just moving at a rapid pace. And in 2021, we saw a huge jump. Just look at the distance between the two lines, the white being for internet adoption, the orange for crypto adoption. It's moving at a faster rate here. He continues here saying, by year 6 after the first 5 million users, crypto has 295 million participants and the internet had 119 million. Crypto is growing at 137% a year while the internet grew at 76%. As I always say, this is the fastest adoption of technology the world has ever seen. Guys, that's significant as far as outpacing the internet. If digital assets slow their growth to that of the internet's initial growth rate, you will get to 1.2 billion users by December 2025. Or if you assume the first 6 years of growth of the internet, we get 2.5 billion users shown on linear scale for dramatic effect. You just see here, guys, wow. I mean, the crypto users forecast is in the purple, crypto users in the orange here, and then the total internet users in the white. Just, it's outgrowing the internet significantly as far as adoption. Using the 76% growth rate, suggesting a near halving of network growth as network matures, we now get a 5 billion users by 2030, i.e. it becomes the dominant source of owning, transferring, and recording value and contactual terms global. Wow. He continues saying here, okay, but what drives this adoption? Clearly, everyone owning a part of the network creates alliance of interest, which leads to exponential growth. And simply put, blockchain is just a better way of doing things in the digital exponential age. In a digital world, everything trends towards zero in the cost driven by Moore's law and other phenomena. But blockchain changed all of that. It created verifiable and immutable digital scarcity, allowing an explosion of use cases in the layer 1, layer 2 applications layer. We now know that Metcalfe's law is the key valuation model for digital assets, but it's a hard formula to apply. And I'm a bit of an idiot, so I wanted to find an approximation that helps understand network value. After a lot of work, trial and error, this is the answer I found. The value of a digital asset network is driven by daily transaction volumes in dollars or units of value times the number of active users. When you apply this formula to digital asset networks, you get a really good fit. Here is Bitcoin. Very interesting. And he also gave one for Ethereum. He even gives one for XRP. And Polkadot. And he says, as we get more data, we will keep building more of these to test our hypothesis. But I think it will apply to all networks, even NFT communities, most likely PFPs and not art. I'm not sure what PFPs are, but let's see. This allows us to know if a network is getting true adoption and how it will affect price or market cap. I'm guessing that we can then build models around rates of change in the network to give signals. Now, real quick before I continue, guys, remember we've talked about Metcalfe's law and network effects and using the example of Facebook. What gave Facebook value before it was monetized, before they put an ad or allow people to do advertising? Network adoption, network effect, more people joining the platform gave it potential, obviously, of the revenue it could hold. And that's because people were using the network, they're on there, they've opted in, right? And the same thing applies to crypto. While it's not a social network, but if you buy Bitcoin, you're part of the network. And you could potentially use Bitcoin on a day-to-day basis. And you do the same thing with Ethereum, XRP, so on and so forth. So a lot of folks don't understand that concept, that if you have people's attention, you have them opted in, there's value there. And obviously, with crypto, you have the tokens on the respective blockchains, right? And you see, right? You take the Facebook example and just put it there with a monetary incentive. Of course, it's going to be valuable, right? And that's kind of what's behind a lot of Raoul's thesis, which is absolutely correct. That's how networks and things have historically gotten value, and how you also look at how companies get a valuation. Now, that's just one part of it, right? Their revenue generated and so forth is, of course, the other aspect. But in order to generate revenue, you need people to use your product. You need people to opt in. So it's the network effect, my friends. Metcalfe's law. It's pretty amazing what's happening. He says, we've recently been tinkering with 3M or 3M ROC. Bitcoin's recent slight outperformance can be explained by increased network activity versus others. Interestingly, to see the ROC change from all picking up too early to say that it is going to be the start of a positive trend. I hate Twitter when this is valuable information, but I hate Twitter when you have to cut out some of the words to make everything fit. But pretty amazing charts and data that he's put together here. And he also highlights that Ethereum has outperformed Bitcoin. The network was growing faster, but less so this year, hence why ETH has underperformed a bit. Very interesting. He says, I think that networks that burn token supply would likely outperform over time. And that needs to be taken into account, into the model at some point. In ETH, it's the transactions volume that drives that IEP 1559 and the upcoming merge. We know Raoul is very bullish on Ethereum, and I think Ethereum will do well. I hold in my portfolio. By the way, guys, this thread is long, so I want to just kind of give you the highlights. Let me jump past. Let's see. You know what? I'll go through it because I think all of it's important. He says, what is interesting is that price is not an input into the model. What it says is that the value of a network is how much value gets transferred and how many people are active participants transferring value. Each chain creates value for different reasons. Bitcoin, for pristine collateral, security, and store of value, brings large numbers of users transferring large sums of value, hence why it is the most valuable network. But ETH has more applications, and the transaction value per monthly user is broadly in line with Bitcoin. Thus, if ETH attracts more users over time, it will flip in Bitcoin in market cap. Not that it matters, as we are comparing apples with oranges. Both have different value use cases. I agree with that. Before dependents talk about dual access, etc., I am just trying to find a best approximation, not a mathematically elegant and perfect formula. Contextualization and understanding beats perfection. He says finally here, but if a network continues to create network effects, then the log regression channel is still an excellent way of forecasting the future. Assuming Bitcoin remains one standard deviation below trend, it gives a price target of $600,000 by the end of 2024. So that would be awesome to see that happen. He says here, if it slows to 2 SD below a trend, then you get a number of around $300,000. Maybe the regression trend should be taken from 2013 to avoid the very early spike that gives slower growth and lower targets, and give trend at 700K, 1 SD below at 350K, and 2 SD at 200K. I'll take anything over 100K. He says, I hope you find this work useful in gaining understanding how these digital asset networks accrue value. To truly build value, they need use cases that transfer large ongoing volumes between lots of users. The end. This is great information, guys. And it just shows how these macro guys think. And I would highly recommend following Raoul and reading this tweet as well. And once again, I often use the Facebook example, how Facebook had value before monetization. And that was because it had network adoption, people on it, using it, right? People buying respective cryptos and transacting it or building on it or using it. That will drive value, in addition to different use cases and other projects being built on it. So pretty cool information here. Now, you all know I hold Algorand in my portfolio. I'm very bullish on Algo. I've interviewed the folks there. They have central bank digital currencies being built on the Algorand blockchain. So Anthony Scaramucci and Michael Arrington, they've both invested heavily to build out the ecosystem. Well, he shared an article that was done by Sean Ford, who I've interviewed a couple of times, of Algorand. And the title is How to Make Blockchain a New Kind of Economic Engine. And, he tweeted out that article saying, patience and faith, see through the noise. And he tagged Algorand. So we know he's bullish on it. I'm bullish on it. I think Algorand is going to be one of the winners. If you look at the metrics and all the information that, and all the features of it, it's really one of the top blockchains out there, in my opinion. Some may disagree, but I'm looking at the stats and what's being built on it and who they're partnering with. So I continue to accumulate Algorand, and of course, you can stake it and earn rewards. Obviously, this is not financial or investment advice, but I'm bullish on Algorand. And we have an update here from Charles Hoskinson regarding Cardano. Well, some people were spreading FUD about Cardano and how there's lack of building on it and yada, yada. Well, the folks from the ADA community were going out there kind of putting out the facts. And Charles tweeted out regarding, the transaction volume. He said, what most also don't understand is that many Cardano dApps, decentralized apps, are waiting for the Vassal hard fork in June to launch to benefit from pipelining. So it seems we ain't seen nothing yet on the transaction volumes. So essentially, they're being called out by saying, hey, you don't have the transaction volume, people are not building, yada, yada. And Charles highlighting that, look, there's going to be a lot more happening. We're just going to wait for this hard fork. So look, I'm an ADA holder. I've interviewed Charles. I think Cardano has great potential. Obviously, there's going to be a lot of folks who don't like it because they're maybe holding Polkadot or AVAX and so forth. This is why I diversify, so that if one does fail or multiple fail and there's one winner in my bag, I'm able to make some money there and profit, because we don't know, because we can't predict the future, which will be the ultimate winner or winners, right? I do believe there's going to be multiple winners and there's going to be some competition, but look, some are going to die. Just like in the dot-com boom, there were great companies. There were multiple search engines, but some didn't make it, right? Many of you may remember Alta Vista, Lycos, and so forth. AOL, while it made it, it's kind of dead, right? Yahoo, and then Microsoft had Bing, and obviously Google was the big winner. So you've seen this in adoption, so with different technologies. So I am bullish on Cardano, and we'll see how things progress. Finally, Kodak Black. I don't know if you guys know who he is. He's a hip hop artist. Well, he was being interviewed on a podcast, and he said, if I'm making 300K for a show, send me 100K in Bitcoin. So crypto is seeping into all aspects of society, and people are becoming more aware of it, and they are adopting it. We're just seeing almost everybody now, whether it be through NFTs or crypto, they're just jumping in, and that makes me bullish. We're still very early. We haven't hit full mainstream adoption yet. So it's coming. And once again, patience is so important. All right, guys, let me know what you think about this. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.